Hi, I'm Dan Stoker with Keller Williams.
And I'm James Allen, mortgage advisor at Guaranteed Rate.
So, James, is there any way to get rid of PMI?
Yeah, well, there is a way to get rid of PMI simply. It's to put 20% down, right? But there's also some workarounds that I think many first-time home buyers especially, but really any home buyer might not actually be aware of to kind of mitigate it or make somebody else responsible for the MI. So there's a couple options. Option one is the traditional method where you're putting less than 20% down and you're responsible for a monthly mortgage insurance premium that would expire once you reached 22% equity in your home. Option two, which is something that lots of people don't talk about and lots of consumers are unaware of, there's a thing called a single premium MI where you can basically pay the whole thing off at closing. One of the things that a lot of times when customers call and they say they don't want to pay PMI, one of the things we're able to do is work with the realtor to structure their contract in such a way where we can leverage a seller credit to offset and pay for that entire PMI policy so that the buyer never has to pay a monthly PMI, right?
Oh, wow, so that's very interesting. So, you could get the seller to pay for it.
Essentially, yes, they're going to give you a credit that covers the entire policy so that effectively you have no monthly PMI as a part of your mortgage payment. That's correct. There's a few other options too. There's a split premium PMI where you can put a little bit of money down and reduce the cost of PMI if that's something that you would like. Or the thing that most people are really unaware of, and this pertains to first-time home buyers the most, as it relates to CHFA, the Connecticut Housing Finance Authority First-Time Home Buyer Program, most people don't realize everybody's focused on the rate that CHFA gives, which is excellent, right? It's either 3/8 below market, it could be a quarter below market any given day. Awesome rate. The bigger savings with CHFA is that they subsidize the PMI by almost 50%. So if you were able to use a CHFA loan, if you qualified for that as a first-time home buyer, your PMI could be subsidized by about 50% of what it would otherwise be with any other program.
Wow.